We're joined now by Christine Benz, who is the Director of Personal Finance and Retirement Planning over at Morningstar. Christine is also the author of How to Retire, 20 Lessons for a Happy, Successful, and Wealthy Retirement. Christine, great to have you here with us. I want to get your reaction as well. You just heard our own Kerry Hannon lay it out as to Walz's financial picture there. What is your assessment?
Well, Kerry's absolutely right that Tim Walz is one of a shrinking share of our population who is covered by a pension at work. I think roughly 20% of workers have pensions. And the really nice thing about government provided pensions is that they do provide an inflation adjustment to help you stay whole with the cost of living increases. Private sector pensions typically do not have that, and so they're less valuable. But I think what's interesting is what Tim Walz doesn't have, which it doesn't appear that he has a lot of stock and bond assets. That's increasingly uncommon to see someone with his income level not have a portfolio side by side with his pension. And typically workers, even those who do have pensions, have the ability to invest in something, a 401k, 403b, and they should avail themselves of those opportunities because you have the opportunity for long-term compounding. The earlier you get started, the better.
So, Christine, what is he missing here in terms of not having equities and other investments in his portfolio? I understand that he has pension managers running some of that on the side that he has no control over. But from your take, what's he missing here?
Well, one obvious category would be having some tax-deferred compounding, which you can get in the context of a company or a government-provided retirement plan. And that's a beautiful thing to be able to invest and see your money grow, but not owe any taxes on it from a year-to-year basis. It's not possible to see whether he has holdings in the thrift savings plan, which is something that government workers are able to avail themselves of. The TSP, the thrift savings plan, is a gold-plated retirement savings vehicle. Anyone who has an opportunity to save within it should probably take advantage of it because you do have that opportunity for long-term growth. And you also, if you have a separate silo of assets, even if you're covered by a pension, that allows you to do other things with that money. So you could cover long-term care if you should have a need arise, or you could, put a down payment on a home or whatever the case might be. You'd have more flexibility, certainly, than you have with that pension income.
So, Christine, one other sort of sidelight here. He actually doesn't own a home. He sold his home a number of years ago. How big is that a part of someone's retirement plan, having home equity?
Well, oftentimes it is people's biggest source of net worth. And as people age, having that home ownership provides a really great hedge against inflation. We've seen housing costs really go up over the past couple of years. People who own their homes, and older adults tend to own their homes at fairly high percentages, have effectively a hedge against those rising housing costs. So it's, I would say, a pretty rare oversight for someone of his level of wealth. I can understand why he might not, but it is a valuable asset and the biggest component of older adults' net worth. That is another thing that can be a huge advantage if someone does have a long-term care need, if they say need to move into a facility to get a higher level of care. The home can be a tremendous asset in that context.
And Christine, just lastly, from what you've evaluated, what about J.D. Vance? What is the financial assessment of the Republican vice presidential nominee?
It's a much larger portfolio, and I think it's also reflective of a generational divide. J.D. Vance is someone who has had a career in the private sector. His investments reflect that. It appears to be a pretty broadly diversified portfolio, lots of individual stocks, as well as a cryptocurrency position and some fixed income positions, but a better diversified portfolio. It's what I would expect of someone with a higher level of wealth. So I don't think a lot of surprises, though I will say that many investors, even those with significant levels of wealth, do use exchange traded funds instead of baskets of individual companies. But it does appear that JD Walz has some private companies which are not generally investable in the context of a mutual fund or an exchange traded fund.
Interesting. All right. Christine Benz, Director of Personal Finance and Retirement Planning over at Morningstar. And thanks to our very own Kerry Hannon. You can check out Kerry's story up on yahoofinance.com. Thanks so much.